Welcome, everybody, to our CEO Club meeting. I really thank everybody for taking the time. I want to let everybody know we're making history today. This is the first time we've had a virtual meeting in the history of the CEO Club, and we go way back to 1978. So we hope this is the last one, too, but we'll certainly keep you informed. Later, we're going to hear from our panel. We have an esteemed panel, Len Miller of Len Miller and Associates, great CPA firm in town, Ken Pearce, one of the top wealth managers locally as well as nationally, and Vasilios Pearce. He's legal counsel for your growing business and does a fantastic job. And we're going to be talking about, folks, getting through these difficult times and what are the best practices. And I'm sure we all have some stories to share, and we're looking forward to other people's comments too. But first of all, for our guests, we have lots and lots of guests here today. And unfortunately, just like we do at regular CEO Club meetings, we will not get the opportunity to introduce you today. But let me give you a little tidbit, a little bit about the club and what we're all about. CEO clubs are found in many major cities across the United States, but we're very, very heavily involved internationally. We have 8 chapters in China, chapters in Korea, Dubai, the Philippines. We have 2 chapters in India, Singapore, Vietnam, Greece, and Egypt. The club itself was founded, like I said before, back in 1978 as a nonprofit. And quite frankly, that's why our dues are so very low. And we have a subset of the CEO Club, and it's called the Presidential Advisory Council, or PAC, P-A-C for short. I can assure everybody we are not a political action committee. You'd be surprised how many times I get that question asked when I say we're a PAC. But it's a much smaller large CEO Club meeting that we have. It's only about 12 to 15 people, tops. It's non-competing companies. We sign confidentiality agreements. And it's really the concept of the mastermind that Napoleon Hill wrote about way back when in his great book called Think and Grow Rich. And if you don't have people that you can bounce ideas off of other than your accountant and your lawyer, I strongly recommend you getting involved with a group like this, because like I said, we act as a board of advisors, and people that are in that group get fantastic information on how to grow their company. Okay, that's a tidbit, like I said, about the CEO Club. I always like to recognize our sponsors at each and every meeting because they help defray a lot of our costs, so they get recognized at every meeting. I've asked them to be short and sweet today, keep it under a minute if they can, and because of our limited time here today. Okay, our platinum sponsors. Let's hear first Steve Taramino of CCNA Strategic Media. We do strategically planned work. Measured results is all the work with the CEO Club of Baltimore. And I can't say enough good things about Steve Taramino. Steve, are you here with us? Do you have Ken? Okay, we'll move to another sponsor here. Ken Wexley of Wexley Consulting. He does executive hiring, he does assessment, he does leadership development. Ken is literally one of the top organizational psychologists locally as well as nationally. Ken, a few words. Ken Wexley, can you hear me? Is he muted? later on. How about Gary Stein? Did Gary Stein get a chance to get in? Okay, folks, let me tell you just briefly a little bit. Gary Stein is our brand new platinum sponsor. Really a pleasure to have him here with us. Um, he unfortunately, he's down in Miami Beach right now. His father, at the ripe old age of 101, just passed away. What a great lifeline. And so he's down there settling this estate. He bought into Studio 83, bought that company about 10 years ago, and it's turned it into a multimedia company, producing TV spots, video, instructional and social media, uh, all kinds of stuff that he does. And really interesting about Gary, if you didn't know, he's a college basketball play-by-play guy for ESPN. And for the last 15 years, he's been NFL's Super Bowl press box public address announcer. I didn't know that about him. I mean, maybe he can get us a ticket. Who knows? Okay, Devin, did anybody else come in? Any other sponsors? I see Rhonda. Is Rhonda in? Hmm. Rhonda, can you hear us? Okay. Well, like I said, when they come in, if you can let us know if we're not in the middle. What did you say, Len? Oh, Rhonda, can you hear us? Well, little technical difficulties. But Devin, let me know. Let me know if you get them on board, Ken and Steve and Rhonda. While we're waiting for that, folks, I'm going to review some of the upcoming events with our agenda. The next CEO Club meeting is scheduled for June 25th. Please check your calendar for that and mark that date. That date's been out there. We're hoping that's going to be a live meeting back down at Harbor Court Hotel, but we'll certainly let you know. Also, our next Presidential Advisory Council meeting is scheduled for June 4th. We're hoping that's going to be live as well, but we'll definitely keep you informed about that as well. In fact, the last PAC meeting we had about a month and a half ago was a virtual meeting, and it went extremely well too. But we're hoping for the face-to-face. The governor lift all these restrictions, but we will keep you informed of that. And finally, the Kristen Rita Strouse Foundation 19th Annual Yellow Dress Golf Classic was originally scheduled for June 8th. That will not happen on June 8th. I can tell you that. The golf club is not fully open up to doing banquets and doing golf outings, but hopefully soon. As soon as we have a date on that, we will let you know, but it will not be June 8th. And I want to thank so many people in the audience, for all their support. We've raised over $1.7 million with the Christian Reader Trust Foundation, and we support some great programs through Johns Hopkins Hospital. Okay, I see we have Steve Taramino. Steve, are you there?
Hear me, Doug?
Work, strategically plan, get measured results, does all the work with the CEO Club. I can't say enough of great things about Steve. Steve, take it away. You have a minute.
Thanks, Doug. I appreciate it. It was an experience getting here, but I'm glad I made it. So yeah, like Doug said, CCNA Strategic Media is a marketing and technology firm. We specialize in marketing psychology combined with digital techniques. Most companies, they ask for our help with things like lead generation, customer retention, brand recognition, and reputation management. One of the interesting things about everything that COVID has brought upon us is that it's changed everyone's model. And one of the things that's really changed for us is how we grow. And this particular year, we're going to start looking at acquisitions and other companies. So if anyone's out there on the call that would like to assist or maybe even consider merging with CCNA, please give us a call. Thanks, Doug.
Thank you, Steve. Great to have you here. Devin, is there anybody else? Did Rhonda or make it back in? Okay. Let's Before I introduce the panel today, I also want to thank Craig Weisbaum of Talking Tree Creative and Devin, who works at that company too, for all their help in putting all this together. It's not just simply, clicking in and making it happen. They do a fantastic job. And Steve Taramino, thank you as well for all your work in making this a reality too. And for everybody in the audience, I want to let you know what we're going to be doing. I'm going to ask the panel a series of questions, probably for the next 30, 45 minutes or so. And then after that, we're going to have questions from the audience. And if you'd like to ask a question when I'll let you know when the time is up, I will point you out to the button below this video, which says ask a question. Please don't press it right now. It will put you on screen. So at the conclusion of the panel, I will let you know when it's time. You can click there if you want and ask your question. Again, we'll review that again when the time is right. Let me introduce our sponsors, folks. And I told you we had an esteemed panel, and I'm really, really proud to have these people with us today. And they're going to share some fantastic information. First of all, Len Miller. He's CEO and founder of Leonard J. Miller and Associates Chartered. It's a full-service CPA firm serving clients who have operations throughout the United States and Canada. Then graduated from the University of Baltimore with a BS in accounting, MBA from Loyola College here in Maryland, and completed the mergers and acquisitions program at the Wharton School of Business at the University of Pennsylvania, literally one of the top colleges in the country. Len is a licensed CPA, a personal financial specialist, and a certified valuation analyst and a certified business exit consultant. He has served on the board of directors of the Maryland Association of CPAs and was one of the 36 appointed members of the Joint Trial Board of the American Institute. Len, welcome. Great to have you here. Kent Pearce. Kent is a graduate of Western Maryland College, now McDaniel University, with a dual major in economics and finance. He also has an MBA degree from Mount St. Mary's University, and he currently serves on the Presidential Advisory Council at McDaniel University. Kent was named by Forbes magazine, everybody, as the #1 financial in the state of Maryland this year, 2020. Also named by Forbes magazine as one of the top 100 advisors in the United States, also this year, 2020. That information was confirmed by Barron's as well as Dow Jones, one of the top 100 advisors in the country. Kent, welcome. Good to have you here.
Thank you. It's a pleasure to be here.
Vasilios Pearce, everybody, is the founder and principal of the law office of Vasilios Pearce, PC. His practice is focused primarily on business, technology, and intellectual property law. He provides legal advisory and business advisory services to many companies, as well as high net worth individuals, provides legal counsel for continued growth. He gained legal experience at premier Baltimore-based law firms and engineering and management experience at a Fortune 100 technology company. He holds a doctorate in law, his JD degree, an MBA, and a master's in science in engineering. Vasilios, welcome you as well.
Thanks for having me today.
Guys, it's great to have you all three. And I want to get right into it. You know, it's so interesting in a marketplace like this. And Warren Buffett, we hear so much from him. He talks about there's always opportunities in any situation. Len, talk about it. You serve clients locally and nationally and well as internationally. What are the opportunities that you see for your clients in this marketplace, whether it's acquiring key talent, whether it's acquisitions or joint ventures like Steve Taramino was talking about? Tell us about that.
I've seen this before in my career in 2008, and I agree with you that this is a great opportunity to take advantage of things that you could do. What I've seen in the past is people get a chance to stress test their business. In 2008, I saw where they came out of that much stronger than they were because they looked at it critically. And many people I've had buy troubled suppliers, or suppliers are going to go out of business. It would impact them, and they actually acquire them and take them over. I've seen them actually do joint ventures with people who may be a vertical for them, where they can have, add to their business and help somebody else keep their business alive, albeit with reduced ownership. And also an opportunity to hire key talent. You can hire, watch for talent out there. A lot of times they can become available and you can acquire them. So it's a great opportunity, and you can really leverage that if you stay alert. You need to put fillers out there, stay very alert, watch your supply chain, that type of thing.
Thank you, Len. I mean, folks, we're hearing opportunities, and there's always opportunities. Kent, talk about, this crisis that we're in. What opportunities do you see that present themselves right now? Maybe to some of your clients. You deal with high net worth individuals, you deal with business owners, you deal with all kinds of executives. What are you seeing?
Well, it's an interesting period because, when we can separate the emotions from everything and really comb into this thing and look at the investment markets, we've been on a bull market run for arguably the last 11 or 12 years. And the last pullback substantially was in 2008. And all of you realize that investors that were able to comb through the emotions back in 2008 and redeploy assets at a discounted price obviously reap tremendous benefits over the next decade. So as a result of this, sad healthcare crisis that has occurred, when we can put our emotions aside, it's actually created tremendous opportunity for two things. Number one, fully invested. If an individual is fully invested at this particular point, it's critically important at this stage that they they rebalance the portfolio accordingly, are in the right asset classes for the best upside to recover. And then for any individuals, obviously, that are in cash positions, there's certainly things on sale right now as we would look out 2, 3, 4 years later. So patient investors are going to be rewarded. A lot of volatility, but if you can comb through the volatility that you see on the media and separate your emotions, there's certainly some tremendous opportunity right now in the investment markets that, quite frankly, we haven't seen again since 2008.
Great point, folks. And I hope you're hearing that in terms of the emotions. A lot of times, especially business people, you don't want to make decisions predicated on emotions. You want the analysis, you want the analytics, you want to be able to really cipher through and make a decision that you can live with. Vasilios, you represent a lot of clients, talk about the same concept. What have they done? How have they changed their business model to not only survive this marketplace, but like you were talking about, opportunities to succeed in the marketplace, and talk about how they maybe have grown as a result of this pandemic.
Well, Doug, there's a lot of interesting dynamics here. When your business model is impacted, you got to do something about it. I mean, there's a couple examples I'd like to share here. One is a company that makes soaps, lip balms, massage bars, and they were in good shape, ran pretty well. But as soon as this hit, the demand for soap was humongous. They added a liquid soap line they'd been working on immediately. They cranked up production. They followed all the CDC guidelines. They went to 2 shifts if they had to, and they're banging out soap that goes into retail stores like Wegmans and other locations, and the demand is super high, and they're secure. There are other clients who basically are in the business of laboratory chemistry type work where they do antibody testing and develop methods for that. That's in strong demand. That client is actually, it's been publicly announced, has signed a letter of intent to sell his business to a Canadian company. That's going strong. There's another client who's basically in data analytics, big data analytics. They're actually helping with evaluating the big data around the corona data and helping the White House to do that. So folks have been able to take advantage of the corona upside And then other folks who've been damaged by Corona are changing their business model to add new revenue streams. Like one client who's a IT consulting firm has started to add online training classes for software types to get other skills that they don't have. So the trick here, as others have been saying, is we've got to add other revenue streams if you need them to keep your business rolling.
Yeah, I mean, it's the name of the game is being able to respond to the marketplace. And just like you said, you've had some people that have responded very well to the market. Len, comment a little bit in terms of helping companies to really develop, what if scenarios. What if a crisis like this hits? What do they need to do? How can they position themselves? All those things. How do you advise people with regard to that?
Well, actually, I just had a conversation with a client this morning because with the PPP loans, it's you still want to be able to document that you felt you had economic uncertainty, even though that question 46 came out yesterday. But basically, what I try to do with people is say, let's look at your business. Let's assume you lose 10% of your sales, 20% of your sales, 30%. Let's also assume maybe that you don't collect all your receivables. So do forecast and do kind of what ifs. It's sort of like, a lot of people did disaster plans for, compliance purposes and all in different trades or businesses. Just basically stress test yourself like you're going to the hospital to get an EKG stress test. Stress test your business. See, what could you do if this happened? What would you do? How would you react? What could you do? Look at if you have a supplier that gets troubled, and I'm seeing more and more as this thing drags on with people have supply chain things. You need to really think ahead of the time, that curve, and figure, can you identify potential suppliers before that happens to you? Because that's brutal as well. So, there's lots of things that people could focus on. Look at what your lines of credits are available. Draw down on your line ahead of time. Don't wait until you're troubled to start trying to draw on the line. Get that money in your possession. Those type of things.
Yeah, it's taking advantage of the opportunities again. But Len, how about, we're hearing accounts receivables are going up with a lot of companies, and you got to really keep abreast of that because some people are hurting. Some people haven't been able to take advantage. Some people have been closed for all this time. And, will they be able to pay you? What's your advice on that? I mean, how much do you monitor that?
I think you need it at the outset, and hopefully you may have already done that. If not, you should. I think you should take your accounts receivable, break it into different buckets. Look at the ones that are rock solid clients, that that they pay on time. You don't think they're in trouble. So put them in one bucket. Look at the next one that says, hey, these people, if I don't bug them, we all have them. If I don't go after them, they're not going to pay me. They're going to leverage me. They're going to drag me out. Forget 30 days, 60 days, 90 days. People want to drag out the 120. I'm seeing that in the marketplace right now. So put them in a different bucket and stay on top of them. If you have that third bucket, we'll say, where you think they're troubled already coming into this, then you might want to go out and say, look, I'll offer you a discount now. I'll give you a discount to pay me this much on this bill. Get that cash because you want to have that cash in your possession. Negotiate with them, negotiate terms, whatever it is, but go after them real hard and look at them, with a real point of view that you want to try and capture whatever you can out of those people before they, I hate to say, fail. So.
Coach, you heard it here. You got to be aggressive. Be aggressive with your accounts receivable. Notice what's going on and have a plan of attack. Great point, Len. Kent, talk a little bit about the differential between market conditions versus economic conditions. What does that mean to our business people out there in the audience?
I think that's a great question. I think that when it comes to investing, majority of investors and majority of financial advisors make mistakes in the fact that they concentrate too heavily on economic data, and then all of a sudden the markets have moved past them. A perfect example is There's been many occurrences where we've been in recessed periods and recessions, yet markets end up trading positive at the end of the year, up double digits. So markets move based on anticipation of. They like certainty. They do not respond to uncertainty well. So they move off of greed and fear, as opposed to economic data, which actually takes longer. For example, in 7 or 8 business trading days, markets dropped back in March, down 30%.
Right.
We were only in the first week of a economic pullback. So the economy could actually take a while, but markets could be could respond way in advance of that, and most likely will. So it's critically important, I think, that where people get caught off guard is it's always better to be a little early with a ticket to the dance than to be standing outside the door with no ticket and you can't get in. And what I mean
to dance with.
Yeah, it's just, we see that mistake all the time. It's so many people, they just can't get in quick enough. The dips are too quick. So the reality is you buy on dips, you take advantage of things that you believe are going to be really good investments 2, 3, 4 years later, and you position yourself really, really well. Do not get hung up on the economy. Focus on the markets. They're two different things. They're indirectly related. They're not directly related. That data is important, but the markets can move very quickly. For example, if there was a news today that vaccines were coming out and it would be a year or 2 later, markets would move tremendously today and tomorrow and be on their way to recovery, whereas the economy still could be a couple of years. So you just can't sit back and wait. You have to kind of move ahead and buy on things that you believe are going to be growth trends and look at where forecasts out where they're going to be in a couple of years, but don't get too hung up on the economy. Because what's happening right now is you see certain industries that will be struggling, restaurants, leisure, entertainment, those things. But then there's a dynamic shift into other industries. I mean, look at what companies like Amazon are doing right now. Look at what some of the retailers are doing in the Targets and the Costcos of the world. So there's a shift of wealth over here. So you're seeing tremendous volatility in the markets, but you can't sit back and wait. Bottom line in summary is buy good holdings on dips where you believe they would be a couple years later, and you'll be rewarded, but do not wait on all the economic data to line up perfectly, because you'll miss the ride.
Yeah, there's definitely a dichotomy there that you're talking about between market conditions and economic conditions. Talk briefly about the recovery. We hear things from Washington, it's going to be a V shape. Other people say it's going to be a U shape. Other people say, well, I don't know. How do you see it?
So there's two sides to that theory, much like there is in politics. Some will say V because of how can it be a V-shaped recovery when it went down so quickly? What triggered this thing up? The bottom line, folks, is we are in a healthcare and a humanitarian crisis, period. And this thing was rolling really, really strong prior to this, okay? It's triggered based on vaccines, antibody testing, and testing as a whole. I think we as a whole feel that there will come an end to that. There's a mad rush right now by all the big pharmas and the biotechs like there's never been before in history to see who's going to be first to the finish line, right? So you have all that working behind the scenes, and you kind of have to be positioned properly to get in this thing. So, it's just one of those things, Doug, where, with this pullback, we have to move quickly. We have to be positioned properly, but we have to be surgical, methodical, look at dollar cost averaging, take advantage of dips, and be kind of patient along the way.
Good point. And, we heard a lot of comments there in terms of surviving. A lot of companies are trying to survive. Vasilios, talk about that. Did some of your clients get the PPP loans that Len mentioned before? And, what's the status of those? Are those loans going to be forgiven?
Right. So yes, quite a few of my clients did get some PPP loans, and it's been a interesting ride. I had jotted down a statistic here for you guys. Round one, 5,000 lenders in the U.S. approved 1.6 million loans, and SBA processed more loans in 14 days than they had in the previous 14 years. So pretty amazing statistic. $350 billion followed by another $310 billion. Just briefly, I can tell you it's roughly, you get a loan amount of 2.5 times your monthly payroll, 0%, 1% interest rate. They needed them. They needed a way to get this money of 2.5 months of payroll to basically pay people. The idea back then was we were sitting at March 15 wondering, then April 1 came, things started to shake loose as far as some of these programs from the government coming through. And we were always thinking, well, we're going to get to April 15, then we had to get to May 15, right? Even if you say June 15, 2.5 months goes by, right? And so that money is going to help prop people up till they can reopen and have someone else paying the payroll and other things. Now, how are they forgiven? Yes, they can be forgiven, but you have to keep very detailed records. You should be coding everything that you do, and you should be clear about you're using that money to pay for things. 75% can be payroll. 25% can go to things like rent and utilities and other items. But as you work through the formulas, and probably Len will be seeing these calculations just as much as me, and we'll be looking at like how many full-time equivalents you had. You have to adjust for that. You have to look at an 8-week period and basically be able to tell them why you need to be forgiven. And if you follow these basic rules, your loan should be forgiven. And that's a great thing in the end of the day, because that bolsters you for 2.5 months and allows you to steer and adjust to where you need to go.
Yeah, and hopefully 2.5 months, where everybody's back on their feet and not only surviving, but, thriving. Len, it's so interesting. Most of us, from a health perspective, we try to get an annual physical to see where we are, or physically, and our numbers and so forth. You can also do that type of thing and talk about it as well. Somebody can do a comprehensive physical on their business, so they can see, they can take a breath and see where they are. What's your comments on that? Len, you still there? Kent or Vasilios? Len, are you still there? Len might be frozen. Kent, you're still there?
Yep.
Okay. Kent,
Doug, you mentioned about, the snapshot on the business, and then you were talking about a little bit earlier, just to kind of come into play, about the recovery, because that comes into play with businesses as well. And depending on where the theories are, you have V-shaped, W, U, everybody has a different thought. But, I think just to kind of elaborate on the grander markets is there is absolutely no doubt that there's industries and there's companies that have taken significant hits and pullbacks and are restructuring. But, what some are underestimating is the fact that, the old saying, don't fight the Fed. The amount of stimulus that's put in to this economy, into these markets, has never, ever, ever occurred at these levels. And it's slowly going to take place here, over the next so many months and quarters. And I think that we need to be patient to let this happen, because otherwise you could make the argument that many industries or many companies literally would be bankrupt right now. But the amount of stimulus that's being moved into the markets and these economies is something that is why certain things and certain industries are going to turn out to be tremendous investments 2 or 3 or 4 years later, is because of the backbone. And it's funny because all of this occurred and the US dollar hasn't even blinked. So it's kind of an amazing, I think it really just shows that the US economy has once again shown resiliency and shown that it is by far the strongest economy in the market in the world today.
Yeah, no question about that. And, they're resilient too. Vasilios, talking on that same line, obviously with the government helping, like Kent does talk about, providing really survival money for people to stay afloat. What other programs did your clients leverage? What else did they do to keep the employees on the payroll? What else did they do to keep their doors open? What else did they do to survive? What are you seeing?
So when we started this exercise, it was like March 15th, and everybody was sitting there saying, well, do I furlough people? Do I lay them off? What exactly am I going to do here? How do I keep them around and yet keep my business, in a position to be able to function? Now, along the way, what happened is a couple of programs came out. One of the things that happened is we had the additional paid sick leave out of the Families First Corona Response Act. We got an additional 80 hours of sick pay that basically is sick pay you can use, and then you get a tax credit every quarter against it. So it's essentially money you get back as an employer to keep your folks around. Now, that money could go to somebody who had to meet a certain criteria. First, you had to, the way it's set up is it says you have to be able to telework. So if you can't telework, then you're eligible. If you could go home and work, you weren't eligible. And then you also had to have one of these other criterias, which was basically either corona related, which was basically you had symptoms or you needed a medical test, or you basically were caring for someone who was suffering these ailments, or you were in quarantine. And so the potential was there for an additional 80 hours of sick pay that you would get back as an employer, and you could keep the employee in a place where they didn't have to use their own sick leave. Because initially it was like people were trying to either use vacation or get to that juiced up unemployment, which happened. And then the other thing that happened was that there were some other things available. Like Maryland had a $5,000 grant. They had a $10,000 loan. They had loans to PPP and manufacturers. But this money went quick. People went and got it. It ran out in a hurry. But those who did get it used it, and all of them were using it to keep the business alive. And that's not to say that they didn't furlough a few folks and trim the payroll a little bit, because some of them had to do that. But they used all these various monies, including the PPP loans, to keep the team together so they could reopen or restart back to normal when it happened.
Yeah, we're keeping our fingers crossed that that's going to happen sooner than later. We also, Steve Taramino, you still with us here? Good man. Let me bring you in because we're still trying to get a hold of Lynn, but let me bring you in because you're our marketing guru. Talk about, what are some of the best marketing opportunities? We've talked about business opportunities, we've talked about market conditions, economic conditions. What do you see as the best marketing opportunities during this pandemic? There's got to be. Steve, can you?
Yeah, Doug, right now, the best opportunity is about streamlining and optimizing the brand experience. In 2019, the end of every year, actually, Adobe releases what they call a digital trends report. And they named the brand experience as one of the most exciting and highest potential opportunities throughout all of 2020. So not content marketing, not social media, SEO, or any other digital marketing, but brand experience. The brand experience has always been important, but in the wake of COVID-19, the way buyers research and choose which companies to work for has, significantly changed. It's not a case that, advertising and marketing are becoming less effective. It's rather buyers are no longer passively relying on marketing, advertising, or information from salespeople to inform them. Moreover, they're really doing personal research more than any time before, and that personal research is what helps them create their opinion. So what that shows is there's a general lack of trust and a high level of uncertainty in most industries. And that means the brand experience from the first interaction all the way through the entire relationship is more paramount than ever before.
Very interesting. And I'm supposing or thinking that there's adjustments as well that marketing teams have to make because of this COVID-19. What's your response there?
Yeah, there absolutely is. So there's really a couple types of adjustments. First, you have to look at staffing. You know, existing marketing staff has always been required, but now you really have to evaluate the efficiency of tasks versus investment. You know, some activities are more efficiently outsourced, and others really require internal staffing. For example, the role of a CMO or a chief marketing officer is a traditionally expensive position to fill. And oftentimes, companies really don't need a CMO for 40 or 50 hours a week. Sometimes, 8 to 10 hours a week to help create and maintain that high level strategy is all you need. So having an outsourced CMO can be vital in that situation because it can save a lot of money in salary, benefits, overhead, and et cetera. The other side of it is making sure that throughout 2020, businesses are really focused on the 5 functions of communication, at least outbound marketing type communication. And those 5 functions are marketing, advertising, branding, PR, and reputation. And when you take those 5 functions and apply them to things like brand experience, making culture an essential part of your outward communications, and then you use them to inform you in ways of data to see what works, that's when you're really going to see the best return on investment in any outbound communications or marketing and advertising.
Hey, you said some key words there. You said analytics, reading, doing research. It's the name of the game. You said about investments. And let me ask Kent the final question before we start getting some questions from the audience too. Ken, I know we talked about, the strategy of just, being there, being available if you have cash to take advantage of investment opportunities, and stay in the course. But, what are your thoughts, particularly going forward for the audience regarding investments as we navigate this COVID period? Is there anything in particular? I mean, you talked about it was obviously the medical markets, the pharmacy markets, and pharma markets, and so forth. Anything in particular you want to, lead us towards in terms of investments?
Well, from our research standpoint, I think that there's different themes that investors need to look at. And, we are in what we consider a new different. So there's dynamic shifts going on where wealth is moving from one sector and style maybe over to another. But I think obviously the growth trends are led by technology. So as a whole, I would say that in my professional opinion, our research feels very strong going forward on technology, healthcare. We also feel very strong from our chief investment office on long-short strategies, which are strategies that have the ability of owning companies long, and then also ones they believe are going to not do so well, they will short them. So I think that you want to take a really big, deep look on growth trends. So technology, healthcare, those types of strategies as a whole, where money and where dynamics are moving. But I would not wait. We definitely believe that smart, prudent investors are going to take advantage of dips. It's very, very key. So our theme is, if you're fully invested, make sure that you're rebalanced in the right asset classes and the right styles. This is the time to get the train in the right tracks. And then secondly, for people that have cash or have some monies on the sidelines, rather than try to time these markets, you should maybe surgically and methodically look at some sort of a dollar cost average movement in to different funds or strategies or sectors or styles that seem to be very, very strong going forward. And again, technology is led in all different areas, and it's just kind of where wealth is moving. That's a big area there. And then you have the last thing would be valuations. For really, really, really patient investors, you've had certain industries that have had major pullbacks. Airlines, healthcare, entertainment. But these would be much longer time horizons, but they're also at price levels that we haven't seen in quite some time. So again, ultimately the patient investor is going to be rewarded, and also the one that can separate emotions and mitigate through the risk and look at things when opportunity evaluations and price levels kind of seem pretty attractive on the pullbacks.
Heard it again, folks. Be patient, be strategic, do your research. Len, we got you back.
Yeah, we lost internet again, and we called Comcast, and they said that they got service people in the area, but who knows? So I'm back.
Right.
Sorry, guys.
I don't know whether you heard the last question, and then after you answer this, we're going to take some questions from the audience.
Okay.
But I was talking about, on an annual basis, most of us get an annual physical for ourselves. What are our numbers? How healthy are we? Do we put on weight? Are we exercising enough? And so forth and so on. And tell us how you can do that same type of a thing with regard to your business. It's a comprehensive physical, where we are, where we're going. Talk about that for a second.
Okay. To touch on what I was talking about earlier, the best thing to do is sit down and look at your business in a critical light and look at what your resources are you have now. Like what part of your health is really healthy? Like, do you have good people? Do you have good supply chains and that type of thing? But then consider that something might happen. Like, look at what do you need to improve? If you don't have a good credit facility, I think some people might learn after this cycle that they might want to try and get a longer commitment from their bank, not just an annual line of credit, but see if they can get a multi-year line of credit and a facility that will last longer for them. Also, again, try to really stay in contact with your customers. If you don't stay in contact with your customers in these times, I'm sure we're all seeing a lot of people are looking at the opportunities out there that we talked about earlier in this type of crisis, that they're out there trying to send your client, send them emails every day. They're trying to bring over some of your clients as well. So you want to look at how strong or how much strength do you have with your clients and how good is that relationship. You also need to critically look at your suppliers. Your suppliers, you need to say what kind of financial shape they're in. I've seen where there's major companies out there now. They've done this in the past. They ask people to give them financials, and they limit how much that person can do of the business that they do with that person represents the total business of that person. Some of them put on 20% limits, so we don't want to be more than 20% of your business because that scares us, because you could become a weak supplier and we're then impaired. So there's lots of things that you could do in that situation. And again, look at your receivables, look at your people. What can you do? I think right now, a lot of people are just through the situation we're in, learning new things about their business and ways of doing business that they've never done in the past. I've had even contractors tell me that despite all this, they're working more efficiently. So
great point. Working more efficiently and establishing those relationships, and how critical important that is. I can't emphasize that enough. Hey, folks, I think we're ready to take some questions. Let me tell you what you need to do if you want to ask a question. Before you go on camera, you will need to mute the event page so there's no audio feedback. To do that, just right-click on the tab and select Mute Site. And you see the graphic on the screen right now that Devin is putting up. Please click on the, quote, Ask a Question button, and you will see a place to enter your name and click Join. If you see a Waiting to Join Conference sign, there are a limited number of spaces, and as soon as one frees up, we will let you in. Once we let you in, you will see everyone else and we'll queue you up to ask your question. After you ask, you can close the window and unmute your event tab to hear the answer and the rest of the program. Okay, folks, you also can call in at 1-405-389-1115 and just enter the PIN 843-824-510 and the pound symbol. So you also can call, folks, 405-389-1115. And Devin, you're going to let us know if we have people lining up. While we're waiting for people to jump on board, Vasilios, give us a quick analysis, if you will, of the M&A, mergers and acquisitions environment and how that's changed in the COVID-19 era. You heard Steve Taramino at the beginning when as talking as a sponsor. He's in the process of maybe doing acquisitions. Or other people, if you see that marketplace heating up, or other people, looking to do acquisitions?
Yeah, so it's an interesting environment. If you were waiting and waiting for the time to hang on a couple more years and sell at maximum dollar, you missed it because it came down. There's lots of reports out now that are talking about valuations have dropped anywhere from 10 to 50% on your business. So you've got to continue to wait. We don't expect to see a ton of acquisitions in the normal course of what we were seeing before. What you're also seeing is some breakups of deals. The Victoria's Secret deal where they were going to invest $1 billion fell apart. Signed deal that was canceled because of the breach of the agreement, because of what Corona happened to happen. And then you had another deal with Embraer where Boeing was going to buy into that for a couple $1 billion. That was canceled, and Boeing paid a $75 million breakup fee. So I think we expect us to see the smaller companies that are in trouble who get bought out with the larger ones and want to land somewhere and save their employees. And I'll end by saying that Uber's trying to buy Grubhub. So Grubhub is down 80% on their, Uber is down 80% on their ride business, but Grubhub is rock and rolling with the food delivery business. So they're looking to combine. So you're going to see those strategic deals and the small ones that are distressed for a little while longer here.
Interesting. It's interesting to see what happens later in the year too. Devin, you have anybody that wants to chime in? Greg who? Oh, Greg Weisbaum. Good. Greg Weisbaum of Talking Tree Creative, our mastermind behind all this. There he is.
Hey,
he has
how's
a
everybody
question
going?
for the esteemed panel.
So my question is...
We can't hear you, Greg.
So we're in the event business.
Devin, we can't hear him.
And we've pivoted to virtual conferences for our clients. And the prognosis is
can Len hear
out still.
No.
We'll see how it goes.
So how can we answer the question?
Can you guys hear him?
I can hear him.
I can't hear.
So the question is, so we got
like
the
Johnny
PPP
Carson
loan,
and Karnak.
which allowed us to bring our
Devin, can you
staff
summarize
back.
the question for
We
everybody?
are actually one short of what we had when we applied for the PPP loan. So the question is, can we use that payroll money to pay somebody else if we bring a replacement employee in for the 2 months to as long as we're still spending it on payroll, the 75%. Yes.
Okay, who wants to take that? Len, go ahead.
Yeah, it's not employee specific. You could pay another employee or whatever, hire somebody else it's really about twofold: that you pay the wages over the 8-week period that you should pay, and also it's about head count. The head count will bite you more. The head count will bite you more than the 75% of the wages, and so yes, you could do that. You could definitely hire anybody you want. It's all about head count. You got to add extra people. It won't get you any extra money, but it will cover and give you greater assurance of some loan forgiveness.
And you would do that because they're going to count full-time equivalents.
Right.
And if you're down, they're going to adjust you down. So you don't want to be adjusted down.
And I could add that the other thing is that when you go to ask for loan forgiveness, you get to pick what benchmark you want to be measured off of. You get the period of January 1, 2020 to the end of February of 2020, the 29th, or you can pick last year from February 15th through June 19th to get the full-time equivalent measure that Vasilios just measured. But there's also a provision that if you end up getting the number of employees by the end of June, then you also can save some of your money. The math is such that if you just do the math, you won't get full forgiveness no matter what you do. So you have to watch that, because they got to tweak it. All this is going to get changed when we go into the forgiveness stage, I think. Because the law never even said 75% for the wages. The SBA made that up.
Wow. Devin, anybody else getting in? Okay. Steve, I have a question for you while we're waiting for other people. You talked a little bit about, the adjustment, the Mark, Steve, can you hear me? You talked a little bit about companies needing to adjust their marketing endeavors and so forth. But what marketing strategies should people follow, after the country reopens? Anything particularly or anything strategic you can put your finger on?
Well, the biggest challenge that most marketing teams and CMOs honestly are having is they don't understand or have a unified place to see the data and see the analytics that can drive their decisions. So we're living in a world of big data, and 90% of all data throughout in all of history was created in the last 3 years. There's over 2.5 quintillion bytes of data that are created on a daily basis. So it's all there. Businesses just have to be more intelligent about how to sift through this data and find one unified source that they can use to help drive their decisions. So data-driven communication uses insight from data to deliver better, personalized, and relevant campaigns. And all those campaigns need to be overlapping in those 5 functions of communication. So that's really where marketing teams, and whether it be internal or outsourced, that's really where they need to focus. And that's where they need to find their information to help drive their decisions.
Good point. Very succinct. Devin, anybody else? Okay, one final question, folks, and then we're going to wrap it up. Vasilios and probably Len, what have your clients, what have you seen in terms of the clients that you have that have transitioned to a telework environment? Were all the clients, majority of the clients, able to do so? What issues did they face? How did it work out? And what do you see the future of that?
All right. Well, let me give you a little bit on that, and Len can follow up with his views of it as well. In my world, there were some people that were ready. They were mostly professional services firms. Digital marketing folks were really ready. The IT managed service folks were ready. And I would say only some lawyers and some accountants were ready. Not everybody had a fully decked home office with everything ready to go, and you could just go home and plug in. But there were enough of them that did. The more challenging ones were the ones where, like, for example, you have a staffing company and you place employees at the customer site. And now you needed to take this employee, give them a computer, and send them home with clear enough policies and instructions on what to do. Or you had the scenario where you had a clinical therapist who now could do more telemedicine and wanted to go home and do that remotely. Well, those folks, they suffered from a shortage of computers. It was sometimes hard to find them. We bickered a little bit about whether the customer was going to provide it or the client was going to provide it. And then we had to put the policies in place so the employees knew what they could and couldn't do at home about confidential information being exposed. And look, all of the family members are at home now, and they're on, they're right there all the time, more than ever. And so confidentiality of information was even more important. And then some of these folks didn't even have a good internet speed connection to be able to do it. And that finally led to the last issue was IT security had to be maintained while we did all this. And clearly the manufacturing clients could not do this. They could only send their staff home, the back end staff home with teleworking. They couldn't do it with the folks who make products.
George, you have a question for our esteemed panel.
Yeah.
Go ahead, sir.
Yeah. Sound like Vasilios still talking, but can you hear me?
Yes, we can hear you loud and clear.
Yeah, you got to
Can
mute.
you guys hear me?
Yeah.
Okay, great. Yes. We're a company, and my question is, can you have get a PPP with no employees and only consultants?
Len?
That's a great question, and that's really one that's being bandied out there because remember
Yeah, we got it, George. Go ahead, Len.
Okay. That is a very good question, and that's out there in the public because, again, as I alluded to earlier, the law, when it was written, did not indicate that it was based on 75% of wages and 25% on that other class of expenses, which was rent and things of that nature. The intent was to fund small businesses. And there's lots of small businesses who have been impacted with the situation you're talking about, where they don't have a lot of wages, they don't have a lot of people, but they have rent and other expenses that they need to cover to stay in business. And the way this thing was designed, or the architecture that the SBA created, has caused a lot of issues. And I don't know how they're going to fix that. I was hoping they were going to fix that with this round of financing, but I haven't seen anything specific on that come out yet. If you watch the FAQs every day that put out by Treasury, you'll see that that's all guidance, but it's a major problem. And there's been things on the news, but I have not seen a fix for that. So don't know where that stands right now.
If I could add to that,
Vasilios, go ahead. Yeah.
The self-employed folks, for sure, and contractors are supposed to be able to apply, and we've had a bunch of them apply. Everything's capped at $100,000 of wages or earnings. So if you were a self-employed, you couldn't go above that number, but you could apply for up to that number. Now, when I've tried to submit companies that then hire other contractors, then the loan officers have seemed to draw a line and say, well, you can apply under your company, but then those contractors you're bringing in have to apply separately because they're not an employee of your company. That's what's been happening and how the banks have been dealing with it.
Up front, because originally the impression was for your head count, because there was people below 500. If you had people who were 1099 or contractors, they were counted. And then they changed that whole rule, which resulted in what Vasilios is saying, where those people have to apply on their own. And so you could do that for your own income, but everything is capped at the 100,000.
Gotcha. Devin, anybody else lined up? Okay, guys, any final thoughts before we wrap this up? Really appreciate your comments. I mean, I think it's been very educational for our audience. Any final comments?
I'd like to make some comments on things that I've been involved in recently where we've had transactions in process where we're looking at a target to acquire for a client or something. What we've done is asked them to give us 90 days or whatever extension on whatever terms we had out there, not terms, but the look-see. And we found that most people are willing to cooperate with that. I have another client where I'm a trustee of a major company that owns all kinds of different businesses, and we were trying to locate another location in the Virginia area, and we were concerned about where is this all going. So what we did is we negotiated with the person who owns the property, say that we would sign a lease, but we had the right to walk away by any time between now and the end of October. And we told them we would pay them X amount of dollars if we walked away from the lease, and if we stayed with the lease, they would apply that to our rent, and that was a good way to try to keep that alive and make both people happy. So just some thoughts for these are unique times, so you have to be creative in these unique times.
Negotiate. Well stated, Len. Anybody else before we wrap it up?
The only thing I'll say from an investment standpoint is, there's an old saying on Wall Street, if Nordstrom's had a 30% off sale, there'd be a line down the street. But when Wall Street has a 30% off sale, nobody's in line. And, Warren Buffett always talks about how he created most of his wealth over his lifetime on his patience and others' lack of patience. So during this period, the single worst thing you can do is freeze and do nothing. Again, it's very important to reevaluate if you own investments, what you own, and make sure that you're in the right lanes, which are the right asset classes, the right diversification, the right strategies based on you or your family's longer term objectives. But then also from a strategic standpoint, separating emotions again, there are opportunities, and it's a unique opportunity, and the patient investor, we believe, will ultimately be rewarded here when we look back, years from now.
Great point. And again, respond with facts, not emotion, folks. So very important. Anybody else? Final words?
Last things from me would be, and we emphasized this earlier, collect your AR. So many people don't do it, and tell them every month your AR is getting old, and they basically send us the reports and they don't do anything about it. You got to fix that. If you really think that you can line up lines of credit to cover that and let it float, then make sure you've got them. Let's negotiate a loan with a private investor if that's what it takes, if you can't get a bank loan. But you can't let that problem carry on. It ends your business. And the other thing is, you've just got to keep adjusting the business model. We can't hunker down. The first 2, 3, 4 weeks of this exercise was hunker down and hope things get better. Well, I think we've all learned by now that we need to make adjustments, and we need to find a way to have more revenues coming in, even if we're doing something different.
I love that. What a great motto: hunker down and hope. You can see everything passing everybody down as they're hunkering down, but just be flexible. Well stated, Vasilios. Steve, I thank you for joining us as well, and especially when we lost Len. I'll give you any final word that you want to add.
Yeah, I think I would just echo some of the things that the panel said. There is opportunity, lots of opportunity to be found. One of the items that most people forget is that their brand is their culture, and showcase what makes you unique, showcase what makes you different, and that opportunity will arise, and you'll have the chance to take advantage of it.
Great point. Culture of the organization, folks. We can't say enough about that, and really, it's where the cream rises to the top. Take care of your people. They're your most important assets. They walk in the door every day. I want to thank you all, Len, Vasilios, Kent, Steve. Thank you for being our sub there as well. Really appreciate everybody. And our audience, thank you. We will be in touch. Next CEO Club meeting again is June 25th And the next Presidential Advisory Council meeting is June 4th. Thanks again to Craig Weisbaum and Devin from Talking Tree Creative for bringing us this special virtual meeting, and to Steve Taramino as well for helping us as well. Thank you, folks. Have a great rest of the day, and we hope to see you soon.